What's up, guys? Welcome to another Trade Genius podcast. Philip here. Bob's on vacation. He will be back tomorrow. Wanted to address this Bitcoin pump. Massive squeeze, right, in the last day or so. A lot of moon boy predictions of where we're going, but I wanted to talk to you about the realities of this move. Is the bottom in? We're going to talk about that. And also, we're going to talk about why cardboard matters. That's right, cardboard. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, guys, let's just dive right into the charts, okay? We haven't done some Bitcoin technical analysis specific videos in a while, so let's get to it. Obviously, a huge pump, right? And we've gone up into the shaded blue area. What this is actually on the weekly time frame. This is a large area of bearish supply, and this has to do with the structure coming back down from the all-time highs. And this actually stopped the move last time. This white line represents our previous swing high. We didn't quite take that out. If you look back here, actually I lied, that white line is not, that is the middle of the range. The actual current year high is this line up here. So currently we're at about 31,000 plus 31,050 approximately. So that's our prior high. So we haven't taken that out. Usually that tells me there's some unfinished business. So what does that mean? Well, we're in the buy the dip mode. So I'm going to talk about this current situation here when you're in like the squeeze mode, right? Because there's a little different personality to the Bitcoin move when we're in this mode. So you have this big squeeze up. Okay, now there's this trend line here, and that's important when we're in this situation because you run the risk of an Eiffel Tower, and I'm going to get into the reasons why here in a second. But this trend line, and I'm not a huge trend line trader, but I think in this particular setup, you have to be cognizant of this trend line potentially breaking, which is right now is about 29,500. I do expect us to pull back, and I think that we're going to test the quarterly envelope high. So this is our envelopes indicator. Basically what that is it's the previous period, okay, range. So the monthly envelope high means last month's high or low. That would be the monthly envelope low. Or the quarterly is the previous quarter high or low. All right. So that's what those are. And you want to have those plotted on your charts. And it's not just for crypto. We look at them in equities as well, or the indices, the S&P 500. But we look at those because those are important levels. And a lot of times what will happen is the moves will sometimes they'll trap buyers above those levels and then bring them in and they get stopped out. And that's potentially a case here if we lose the monthly envelope high. So you can see we've pulled back to it. That level does matter because they've been buying it and they continue to try to bid it. But if we lose that level, we would look for potentially a move down, a back test of it, and then that back test could potentially send us through this trend line and potentially test this quarterly envelope high, which is another level I'm looking at. So we're looking for two things. One is a breakdown of this 29,900, let's call it, area, or we break this trend line. There's another moving average I like to use in this situation. It's the hourly 21 EMA. Generally, you're going to get a pullback to that. You may test below it, but you're going to most likely get a bounce from that in this situation. The only reason why that wouldn't work is if this rolls over, breaks this trend line, and starts the Eiffel Tower move. Now, why would we expect that? Well, there's a couple reasons. One is there's a lot of long leverage in this market, and we know that because we can take a look at this chart here, and this kind of shows us our liquidation levels. You may have seen this on other sites, but basically they figure out where the liquidation levels may be based on the exchange data. But this is an extremely high amount of the liquidation levels, and this is high. I mean, a reading of 30 billion on Binance is historically very, 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 very high. So what that means is you do run the risk of a fairly large and quick pullback. And I'll give you an example of that was in September of 2022. Well, let's take a look at that chart. Okay, so here's September 2022. Now you'll notice similar situation, big squeeze. They are able to hold the trend. You'll notice you get that pullback to that hourly 21 EMA. All right, I like that. Moving averages when it comes to a lot of the moves are fine when you get a strong trend move. Otherwise, a lot of times you're getting chopped up and it's better to trade the ranges. But for in this situation, I definitely want to respect the first pullback to that. But you'll notice that we get this trend line, right, that we hold, and then what happens? Big rug pull, right? And so that's what I'm worried about when I see a move like this, that when you start to develop the upper structure and you get that trend line that like you see now, we're starting to be able to draw. And again, this is an hourly chart, just like what we were looking at. I get a little leery on the moves below this. So if your technical support levels below, don't hold, because you should get a fairly immediate reaction if the bullish trend is going to continue. You really do run the risk of unwinding all that bullish leverage that I just showed you out of the move, and you end up Eiffel Towering the entire move back down, as is what happened in September of 2022. So we have to be very careful that we don't get caught into that situation as well, because a lot of people are going to be chasing this move up, just not cognizant of the fact that there's a ton of leverage in the system. Switching charts now, this is the liquidation heat map. And so I have to point out that the 28,800 level is a big target for market makers. There's a big prize there in liquidity. So what that's telling us is that in likelihood, the price pushes down to that level, you're going to get a bunch of stops, and market makers are going to look to fade that move, get filled on those stops, and push the market back up. So the liquidations really start to show up here south of 29,725. So you can certainly see a move down to that level that we talked about below, and that would even get you down through that trend line if this really started to pick up, where we have to be careful. Now let's talk about the levels below the trend line. So what I want to show you is kind of a bigger picture of what we're looking at in the terms of the ranges. So, you know, Bitcoin loves to trade in ranges, right? And best thing you can do is to identify the range in play and then assume that we're going to go from one side of it to the other, unless proven otherwise. So if you notice here, right here is a range low, 25,338, range high, 32,383. Sometimes Bitcoin's playing in a range that's relevant on an hourly chart. Sometimes it's playing in a range relevant on a daily chart. Maybe it's playing in a range relevant on a weekly chart, right? They're all in play, but sometimes only the smaller time frame really matters and is really reactive. Or in the case like this, where you get a huge range breakout, you have to kind of pull out and look at the bigger range. So what we're looking at here is a move that's going up toward the upper part of the range. The mid range here is around 28,890 or so. So we'd be looking for a reaction there as well. But what we're doing, this is a VWAP. So this is showing us the yearly VWAP, developing VWAP. I personally was looking for, what I wanted to get was potentially a move down to this VWAP level and then catch a bounce. We didn't quite get there. And what we ended up doing was taking out the range low. So that this range that we're currently in is developed from that low to that high. Okay. And so this is pretty textbook when it comes to range trading. You take out the low, right? You trap the bears down there and you squeeze back up. Now we have these bands, basically standard deviation, and I also have an alternate line for alternate calc VWAP. When you're doing VWAP on Bitcoin, you really should be using an aggregated VWAP. So I had to take and modify the code, but I'm basically pulling all of the spot exchanges, and that's how I'm coming up with an aggregated VWAP essentially for this. But we're going up into what we would consider the VWAP range high, and that was of 2022. So the entire year, this is where the VWAP values ended up, right? So there's VWAP and then a standard deviation around it. And they really do matter. The algos really do react to those. In fact, this is where this stoned the move earlier this year to the upside. So being that we're up here and looking for the middle of the range to ultimately hold and then a push back up, that would be a deeper pullback. But looking for this to take out basically that previous high, and then ultimately we would look for the range high to be taken out. So the 32,418 is, if we're going to play this out and this move doesn't collapse in on itself here, that is the upside target. And from there, we want to see what the reaction is. I think there's an initial short there, especially if you poke above it and then get a push back down below it, similar to like maybe a daily candle like we saw at the previous top. You know, that would be a short. And then we have to see, you know, is it a short-lived short and they push back up and then try to flip this to support, which is possible. And then we look for that 32,500 area to hold, and then we can move on up. The higher targets would be a 50% retrace of this entire move, high to low, which would take us into the low 40s. But, you know, we'll address that if this scenario plays out. Looking at levels below us, I just showed you the yearly VWAP. We're going to switch now to the quarterly VWAP. Another thing to note on these type of squeeze moves that we get where it's a really, really strong move, Bitcoin tends to do a couple of things. One is maybe give back 5% of the move or 10% of the move, if not the entire move. And so what we have to do is then look at, okay, well, what does 5% give us? Currently from the previous highs, or currently from the most current highs down, that takes us to about the top of our quarterly VWAP range, which is that 29,200 level. I personally think that's a very interesting level. That's not only the quarterly envelope high, but also this VWAP range high. So that's first level. Now, if that doesn't hold, we can take a look at what's going on here on the monthly VWAP. So what we did, or what we're doing, is we're holding over, not only are we holding over the monthly envelope high, this also coincides with the previous month value VWAP high, from back in April. Okay, so that is holding. And if that falls down through that, then that's what I'm looking for a further move down to 29,200 would be to lose this 29,900 level. So it's an important level for a couple of reasons, but that's a current support. And as you can see, we're getting a lot of interaction there. There's attempts to push lower and then it pushes back up. Remember, all of these reference levels, unless there's a large liquidation cascade, are going to likely see multiple attempts at buying the dip. Okay, because there's people going to be FOMOing in on this. Now, as far as the macro goes on this move, is this the move? Are we leaving the station? I'm going to argue that I think we have too many economic indicators telling us that things aren't rosy. And so you have to look at this Bitcoin move as either, well, we are going to go into supply shock and we're basically going to say that this whole area was just the bottom and this move is going to continue on. And basically what you've seen in the last couple pullbacks is going to continue. And we're just going to just keep on marching back and start challenging some of these previous highs in a pretty aggressive upward pattern like we're seeing. Break away from the markets, and it's Bitcoin's off in its own ecosystem, and the larger macro markets don't care. If we're in a supply squeeze scenario, I would say yes. We're not seeing the amount of supply leaving the exchanges. Yes, it is reducing, but I don't think we're seeing the amount needed to actually initiate the supply squeeze that we're talking about. I think these moves serve as a good reminder of how quickly Bitcoin can move when there is demand. And I think this is more, I think a lot of this is a lot of leverage and liquidity games, and you're seeing these kind of like $4,000 type squirts. But when there's actually going to be real demand, sustained demand, where the supply of the Bitcoin on the exchanges is getting drained, I think you can make the case for why Bitcoin could see $10,000 daily candles day after day. You could have an enormous squeeze. And the thing with supply and demand is that a lot of times the supply will lag price as far as the supply metrics. So you could have a drain on supply and there's a very lagging effect on the price of Bitcoin, for example. So that's something to keep an eye on. If you see that supply really dwindling and price isn't reacting, that's where I would start getting long for the big long swing trade, because when it starts to happen, price is going to leave the station and we're not coming back down, guys. That is going to be the move that will never come back. So that's the big one that we're waiting for. But what I wanted to do is talk about the economy, and the best thing I like for the economic indicators is paperboard or cardboard production, right? You use it in everything, right? We're a consumer economy. We live on cardboard, packages, everything. Notice this chart. This chart is screaming at us that all is not well. The paperboard production rate of decline is just one for the ages here, right? Stuff that we haven't seen since the great financial crisis. And typically this leads, so you notice that this upper chart, this isn't happening on the lows. This is actually preceding the lows. This actually starts to drop severely as we roll over. So that's the case here. So this is my big concern with markets and even Bitcoin, is that ultimately we're up here in la la land. We basically had a short squeeze in the market, which typically you see in bear markets. You will see a bit of a short squeeze, and ultimately these areas down here that we're seeing are ultimately where our markets typically bottomed out in the bear market. So this is a very scary chart in terms of a leading indicator. I'm not a fan of these big sharp declines. Those big sharp declines typically are in front of a recession, and we already know the yield curve is inverted right? We showed you guys that chart as well. So I know we've been showing you guys a lot of bearish data and the market seems not to care, but I'm telling you right now, this stuff does matter. And I think we're, probably seeing the signs of things rolling over. And I think we're going to be weak into the end of the month. Liquidity is rolling over. We'll show you that chart later in the week, but the liquidity, which drives everything, has been risk on since middle of May. It looks like that's going to be risk off here shortly. So I think things are going to start to matter a lot as far as what's going on under the hood. The market's done a really good job of bucking that. And so my view on this move on Bitcoin is I think this market is playing catch up to what we saw in the S&P 500. I think it's similar to like when Litecoin is kind of like bringing up the rear on the altcoin rallies. I kind of think this is what Bitcoin's doing here as far as the macro markets are concerned. So I'm a little suspect of this rally holding. So like I said, you could run into a situation where you Eiffel Tower, or we hold the move up here a bit and we finish the job up at 32.4. But if we do that, I really think that's an opportunity to get hedged to the downside. And especially if it's a quick move, stalls, fails, and starts to work its way back down and the reaction is fairly immediate, I'd be very suspect of that move. So I hope that helps. Let me know your thoughts below if you think this is just a Eiffel Tower type move, or do you think we're leaving the station for good? I'd love to hear your thoughts on that. Otherwise, guys, thanks for watching. We'll see you on tomorrow's episode. Take care.
Trade Genius.